Let's talk about the different ways that people can view gold, access gold, invest in gold. So obviously we've talked a little bit about physical there. Can we just talk precisely how people can do that? You mentioned coins, but there's bars, ingots, and so forth. So,
sure. I mean, and it depends again which market you're in. And I know that your subscribers are from various different markets, but to be frank, in most markets around the world, you can find a place where you buy physical bars and coins. It's not the cheapest way of buying gold. You're probably going to pay the minimum sort of premium over the OTC gold price is probably 3%. And for a coin, that could be as much as 7%. And when you sell it back, you probably get the gold price at best and not even, potentially even a discount. But for people that are really concerned about systemic financial risk, they're worried about the security of the banking system, they're worried about even gold in safety deposit boxes or in allocated accounts, this is sometimes the choice that they choose to make. And it's interesting. It's one of the things that I keep an eye on is to see not only how much gold is being bought in investment, but in what types. And when you see physical bar and coin demand in the West picking up, you can see that people are really worried about the future. If you see people investing in futures, and there's a big futures market in the States called the COMEX futures market, which is part of the CME. You see futures market investors or speculators playing there, they're trying to profit from the gold price. ETFs are probably somewhere in between. So those are three of the methods. Now, we've spoken about bar and coin demand. Exchange traded funds, which were pioneered by the World Gold Council back in the early 2000s. We also are sponsors of the largest one, which is the GLD or the SPDR GLD in the United States, and we have others, and there's a whole plethora of funds out there, probably about 80 now in our database in most major markets around the world. These allow investors to buy an instrument whose only assets are gold. So in other words, you're buying units issued by a trust which physically owns gold, held in a vault. That gold is audited. It's not lent out. It's in an allocated account. So it's as safe a structure as can be put together. But the advantage of an ETF is you can buy it in your stocks and shares portfolio. They're listed on stock exchanges, and the management fee for the products varies from, I think the lowest is 17 basis points per annum, and there are some up at the 50 basis points per annum. So lots of different markets listed, all in the end, the same underlying exposure, which is to physical gold. And compared to some funds, as I say, that's a reasonably cheap way of doing it. Futures markets, and they exist principally in the United States, although there are other around the world, including Shanghai, which is big and growing now. Futures markets allow investors to access gold in a different way. Futures obviously allow you to buy gold with leverage and margin. It's a more complicated way of accessing the market, and it's not for everybody. But certainly there are large liquid gold futures markets around the world that people can access it to.
It's quite interesting times at the moment. You've been through a few cycles, and you'll have seen a few things, I suggest. But we have been having conversations recently with people like Peter Grosskopf, CEO of Sprott. He's a big digital gold fan, so effectively gold backed. We've seen companies who are printing gold notes. So gold between, yes, it's true, gold between laminate sheets, but printed at a nano level, so people can collect them as like a coin, or they're suggesting that they would like to see these, actually physically traded. And if you look at the Bank of Ghana, they've actually in the process of printing some of these gold notes. And I don't know if it's a novelty or if these sorts of things happen every cycle, every time gold goes up. I mean, what sort of things have you seen in the past in terms of people trying to take advantage of the situation?
Some of the funniest things that I've seen have been gold business cards. There was a Japanese trading house, I can't remember which one it was now. This was in the 1980s, that issued to its executives gold business cards. Now, not gold plated, solid gold business cards, which they would hand out very selectively to their most important relationships. And I think from memory, every top executive got 100 business cards to hand out.
I think I've just worked out what they were doing there.
So to be honest, every bull market in gold, every time where gold has regained its tactical allure to investors, we see this sort of innovation, and it's generally very good. There was, I think the last time around, I saw, I think it must have been 30 or 50 gram wafers of gold, which you could snap off into 1 gram units. So one of the criticisms sometimes about owning physical gold is, you've got a 50 gram bar or a 1 ounce bar. What do you do with it? I mean, no one's going to give you change. Well, you can break it up and give it in small pieces when you're trying to buy your whatever you're trying to buy in extremis. So I think this sort of innovation is very typical. I hadn't come across the laminated gold sheet or the gold notes. I think that's a really interesting idea. I mean, look, what I would say is, you have to be really careful from whom you buy physical gold. And as soon as you laminate it and put it through 2 sheets, then I wouldn't be necessarily confident about what's in there unless I bought it from an organization which I really trust. I'd also be very careful about the premium. The premium that you pay over the spot price, to me, is an important determiner of whether you should be getting involved or not. And in the end, you can buy 1 ounce gold coins at probably 5-6% premium to gold. That's probably about the cheapest you're going to be able to get relatively small units of investment gold. I would be surprised if those laminated nano printed things aren't trading at tens or even hundreds of a percent premium to the underlying. But as I say, I hadn't come across them before, but I certainly shall look into them.